Hey everybody, this is Jim at SB500chart.com. It's about 8 o'clock on Sunday evening, September 22nd, 2013. Happy fall to everyone. And before we get started, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as actual investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look at the week, take a look at Friday, and see if we have a clue for what the next week may hold. We're going to start out looking at a daily chart because really what I want to show you in this is pretty basic, and that is we have been operating with this support line for the past 10 months, which is pretty strong stuff. And we have also had a resistance line up here that only has 2 touches, but we're keeping that on the chart. And we also had this really small channel right here that looks like we may be in jeopardy of losing that. There's a chance for a save on this, but we'll talk about that in just a second. So this is kind of the broader picture. This shows, if we zoom out even a little bit more, this really kind of shows you what's been going on for the past almost, not quite, 2 years. So it's been basically a story of going up. We had a very nice rally off that November low, and then we had a nice rally off of that late August low as well. Now let's take a little bit closer look so we can see what may be going on just in this part of the chart. All right. Oh, there's one more line I want to show you real quickly. And I think I got to go to a 2-hour chart to show it. It's this blue line right here. And this line is drawn across the May highs and the early August high, both of 2013. Now what happened was, after we last tagged this blue line, the S&P in a rather unorganized looking move came down and found that support line again, and then in a sort of, again, I hate to say it, but just kind of in an unorganized move, came back up and actually surpassed that blue line on end of the day on Wednesday of last week, and then on Thursday started to sell off and then sold off more on Friday. So we end up being underneath our support line. But there's a couple of reasons why I want to be careful to say that this is at this point a known bad thing. And the reason is twofold. A, we have seen the S&P move below and above this line on this channel on a few occasions. And the last time we got above it was just prior to the move down that got below it. And I think you probably know where I'm going with this. If we were to reverse, either right where we are here or just a few points lower than where we are right now, and then come back up, I think this could get saved. This green line is the old all-time high. If we back out a bit, gotta go out a little bit more. You could see it right here. Oops, no, we could have seen it on that 2-hour chart. My mistake. I was looking over here. There it is right there. So that's the high that we set in the all-time high that was set in early August. We surpassed that, and trading ended on Friday right on that line. So do we think that may give us some support? Well, let's see how much we broke that line. It was about 1710, and the S&P got up to, if not right on 1730, very close to 1730. That would be more than a 1% move. So there's a possibility that even though this is not really a trend line per se, because it's not drawn over multiple tops, there's still, I think, a possibility that we could see some support here. So I want to give the S&P the benefit of the doubt. Now, I'd mentioned I had a SPY position that I took back in back when the S&P was in the 1630s. I'm out of that position now, so I personally will probably just watch to see what happens here. Now, if we were to get a deep breakdown and then a back test, that might be worth a short play. But if we just kind of meander down, I'm probably just going to watch it. But you have to do what you have to do. As far as the week went, it was. I think it went fairly. What's a good way to put this? No real surprises. We're looking at this line right here, and we were thinking we may get some resistance. We really came into the week with the idea that this line could present resistance and to watch it. But if we could get over it, then there's a good chance that this line would be turned once again into support as it was back in July and August. And on Monday, we made quick work out of getting above that line. A little surprising, to be honest with you. So we get over the line, we back test it, then we come back down and we run into our support line here. And the word was, well, we now have this all-time high line right here. If we can take that out, then let's see what happens when we get up to the blue line. And the market just kept on plowing ahead. So, I don't really feel like there was any great success in the week, because we really came into the week, at least I came into the week, being wary of this technical line right here, thinking that we could get turned down at this point. And once we did break over that and we went for a couple days sideways, that did look like a consolidation, but again, just underneath where we might expect resistance. And then the S&P plowed over resistance, plowed over our blue line, but now we find ourselves coming into Monday slightly underneath our rising support line. So, what do? Well, I think we probably consider this line as being weak support. We look at this line, and I think we should consider it probably being fairly decent support. And there's also the possibility that we may find support at this gap level right here from what we would call gap support. So, if this line right here breaks further, then this line will be turned into resistance. And I think this line will probably, if we break this down, then we probably will be encountering both of these lines as presenting more resistance than they did this past week. So I would just come into this week with a wary and a watchful eye, with the idea that that this market is running into some headwinds up here. And because for one thing, we'd been talking about the potential of this inverted head and shoulders pattern down here that really never made a right shoulder. And you remember we measured our target from that, and we came up with 1715. Guys, the market made that easy. So we can no longer really depend upon this pattern and say we even have we have any reason to expect 1715. Right now, all we have to go on once again are some trend lines. So the important trend lines This one would be, I think, more important than this one. This is our old neckline, but as we saw, necklines after these head and shoulders patterns, after they make their targets, sometimes they've done their deal. They've done their job, and now they can get passed through again. But just to be on the safe side, I think we may encounter some support here if the S&P decides it needs to get down into the mid-1670s. And then I would expect this line right here to offer some support, but here's the catch. If we back out on this and we look at the resistance and support that we've been enjoying over the past number of weeks, probably need to go back out to our daily chart. If we do this, you can see that that we had our touch here, our touch here, and then we had a slightly higher high. And if this ends up being a high and we don't surpass that 1730, then that becomes a little bit less of a high. I would think that would probably mean the market is losing its ability to move higher, and we may be in need of some deeper selling. But going into Monday, let's see if there can be some recovery, some strength on Monday morning to get back into this channel and to move up, potentially up into well into the 1700s. And eventually, if we get up there, there is no real resistance until we get to either this line or this line right here. Now, I mentioned that I would talk about this line a little bit in this video because this is new to the chart. Let me just show you where this is. That is going off of the highs of September 2012 and the highs of May 2013. So that's just another, potential trend line for us to take into consideration, and where we may encounter resistance there. So you can see we've got this line where we would expect resistance. We've got this one, and then now we've got maybe even this blue one. So the market's going to have to get some giddy up and go pretty early this week, I think, if we're going to get back into this channel or get over this line and make a run for the high 1700s. It's not out of the question. It certainly could be done, but with the breaking of this line right here, it's looking certainly a lot more iffy than had we bounced there and we'd gotten back over this blue line. Of course, that's only a difference of about 12 or 13 points, but how different that looks. So just one more thing as we look at what's going on here. Let's just draw ourselves a line right here over the last two short-term tops that we see in the 5-minute chart. And maybe we can use that as something of a, I don't want to call it a trigger, but I would say if we could get over this orange line right here, that may signal the market's legitimate willingness to get back about the business of moving higher. So guys, I think that's about it. It was a pretty good week overall, even though I sold my my SPY position early on. I feel good about that just the same. Nice little gain. And let's keep an eye on it early this week. Let's maybe even watch the futures tomorrow morning, see if there's some sense of direction that we might have before the markets open tomorrow. So look, guys, thanks for watching. Take care.